numbers are pretty much manageable in my opinion.
We also have Deven Choksey with us. Hi, Deven. You really need no introduction on a budget day or any other day. Deven, what do you make of the budget overall? I mean, we have fairly good numbers, if you look at the numbers, there's such strong numbers. I was surprised. I was telling Ashish that I don't know why the market looks at a downside, but you have 7% GDP growth. You have a revised estimate for fiscal deficit, 4.3%. Then why this negative sentiment, and what do you look at the big story in this budget this time?
Yes, sir. I think leave aside the market for a while.
Leave aside,
overall 17,000 crore kind of STT impact, which it may have on, I think, the total volume of the market. I think the market has already lost, I think, 6.5 lakh to 7 lakh crore worth of market capitalization. So keep that part little aside for a while, because I think overall the budget, I think, promises significantly good amount of the business of the economy. On the one side, I think it's a back to basic, 10% nominal GDP growth. On the other side, I think back to balancing, which means I think your fiscal deficit of 4.3% and roadmap clear to 3.5%. At the same time, I think the debt to GDP ratio, which is 56% for FY27, estimated, I think is basically targeted to go down to 50% 5 years from now. So from a perspective of looking at, I think, the entire discipline in the financial system of the country, the government is, I think, quite clear about, I think, how exactly they want to see the economy moving in that direction. And in my viewpoint, I think the global investors also look at this particular macro data in a very systematic manner. They get assurance in form of that this country is not going to expand the debt. This country is not going to, I think, create higher amount of inflation. This country is not going to create higher amount of interest rates, and at the same time keep producing at a higher rate of growth. So that is basically an invitation for them to come into market. Actually speaking, I think say a business like data center, I think where the world is basically going to be experiencing the capacity addition to 245 gigawatts in 5 years from now, from current 45 gigawatts. That is 5 times expansion. For 22 years, I think we have created, I think, a tax-exempt situation for data center and cloud computing. In my viewpoint, I think it's a direct invitation to global players to come and invest into the markets in India, because they don't come alone. They come along with their entire ecosystem. So frankly speaking, I think the entire renewable segment of power, along with, I think, the computing, both of them are going to be, I think, a significant attraction point for some of the long-term investors. At the same time, I think they have given the roadmap clarity for taxation. Should one wants to exit before 22 years, they are giving their roadmap clarity to them for charging them a tax at the same time. So no ambiguity involved in this investment. In my viewpoint, I think many sectors are attracting significantly large attention from the investment point of view, including infrastructure, the waterways, the chemical zones, I think the direct freight corridors. I think all those areas probably, I think, are suggesting that the economy is far superiorly placed and far more better as far as, I think, its deliverables are concerned. Market probably, I think, is victim of a little bit of noise at this point of time, in summary, if I may have to say that.
Yes. The second point, I agree with. Second point is also